Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today. We're on Tuesday. Remember, yesterday after 3 days of gains, we did see the first sign of sell-off again emerge in trade. We started off the week on a weaker note. This was after showing a rebound or a range-bound movement that we actually saw throughout the trading session. A positive bias in the past couple of sessions. The market now has started the week on a lower note, and that's amidst the mixed global cues. It failed to hold on to opening gains and ended the day at the lowest level as well, both on the Nifty as well as on the Nifty Bank. In fact, the index also gave up 22,500 level in the last hour of massive sell-off that we saw. The broader markets also underperformed yesterday, with the Nifty mid-cap 100 and the small-cap 100 indices falling 1.5 to 2% respectively as well. Except for the FMCG sector, which posted marginal gains, all the other sectors ended in the red as of yesterday. Now remember, market sentiment is again turning downbeat as investors are becoming increasingly concerned about the US economic growth stalling after President Donald Trump has kicked off this tariff war, and that could continue to cut spending as well as shaking up decades-old geopolitical relationships as well. And that's a remarkable shift in the mood in less than just 2 months of Trump's presidency as well. Remember, President Donald Trump's tariff talk has not only spooked the world markets but now is hurting their own internal market as well. When we look at the kind of sell-off that we have seen from the peak, even for the Wall Street indices, Wall Street has seen a market sell-off of $4 trillion from the S&P 500's peak last month is what we have already seen when the Wall Street was really cheering the Trump agenda. Now, a barrage of new Trump policies has increased the uncertainty for businesses, consumers, investors, notably back and forth as far as the tariff moves are concerned, with major trading partners like Canada, Mexico, China and many other countries to follow. And all of that has led to a sharp sell-off overnight. Dow Jones down over 2%, Nasdaq down 4% and the S&P 500 down by 2.7% as well. That's the kind of sell-off that we've actually seen for the Wall Street. In fact, Nasdaq also logged in its worst day of trade overnight since 2022, as the anxiety continued to mount on the tariff as well as government firings that could torpedo growth in the world's largest economy as well. So that's as far as the US markets are concerned. Following, in fact, within the US markets, several stocks like Tesla sank 15% overnight. Nvidia also drove a closely watched gauge of chip makers to the lowest level since April as well. So the heaviest weighted stocks also contributed to a sharp sell-off in the Wall Street indices yesterday. Now, what we're looking forward to today is that the stocks in the Asia Pacific region have extended their fall for the third consecutive session, taking the cue from the meltdown in the US stocks amid fear that the tariffs as well as the government firing will stall economic growth in the US and therefore cause recessionary fears across the globe. Now, what we have actually seen in the Asian markets today, South Korea's Kospi fell by over 2%. We've also seen that Australia's S&P ASX 200 was down by over 1.6%. You look at Hang Seng, that's also down by 0.7%. Chinese index down 0.5%, and the Gift Nifty is now indicating a start on the muted start at 22,419 odd levels. Not just that, the foreign investors, they continue to be net sellers in the Indian equity market, and that's another watch out for us as well. For the 13th consecutive session, we have seen foreign investors be, sell in the Indian stock markets, although the quantum has reduced to 485 odd crore rupees as of yesterday, with DIS investing about for the 23rd straight session of about 263 odd crore rupees as far as DII investments are concerned. Let's actually look forward to inviting our guests on board to help us make sense of what's really happening around the world and how should average retail investors be really gauging the situation right now. We have with us a very special guest joining in, Mr. Dharmesh Kant. He's the head of equity research, Chola Securities, joining in. Warm welcome to you and good morning, Mr. Kant, and thank you so much for taking the time out. Yet again, after a few days of bounce, we are back at square one, when we are not just seeing the Trump tariff talk impacting the Indian markets and the world markets, but it's now beginning to hurt their own markets as well, with sharp losses being seen on the Wall Street. A lot of market experts are actually saying that we were talking about the sharp recovery in the markets, in the economy in US and in China and world over, but now suddenly that talk is pivoting towards what are the odds of a recession that could come in if the tariff talk continues to be in the same way. So it's a huge sentiment change in the last 2 months that's happened with back and forth on tariff talk and many such policies that he's been talking about. Tell us, what do you think the impact of sharp fall on Wall Street will be on emerging markets like India, sir?
Yeah, good morning, Sakshi. Definitely, it was long pending, long due because this tariff impact, inflationary impact will have a dent on the economic growth. And Mr. Trump's own admission, he never denied that economy will not degrow. He said it's in a transition phase. So this is a broad acceptance now in the US market that tariffs are there to stay. How much is, negotiable? But whether it is 20%, 25 or 10%, this increase in the cost of goods which are being to be consumed in US will have a slow and recessionary impact on the US market for some time. And post say a year, and then again the things are likely to pick up. Having said that, because it's a US market, almost $30 trillion kind of economy they are sitting on, it's a driver of the world economy as well. It will have an impact on India, you know, correspondingly, and all the IT space and the other Indian exporters to the US market, reciprocal tariff parties also do, will come in for some sort of a slowdown. So this is how the picture is emerging. Having said that, the way Indian market has already corrected, my own sense is upsides may be short-lived for some time, at least for a couple of months, but downside will also be restricted. Relatively in the fall, we are going to outperform the fall of the, say, developed economy like US. So if Nasdaq is down 4%, we may be down, at best 1% for the day. That is how I am seeing this market. But yes, overall, earlier interaction you did ask me how long do you think this slowdown can persist, and my own sense was that in couple of months we should be on the back to a sustainable up growth and trajectory path. Now the earnings basket does look like a bit dicier, seeing how things are shaping up after the acceptance is there. It's jury is still out. So let's see how the Q4 earnings pan out and what the commentary is, and thereafter tentatively the market should take a call.
Well, it's not looking too good when we look at the pre-open trade, 240 points lower. We are at 22,200, over a percent cut, something that Dharmeshji just said that we could be looking at for the day as well for the Nifty, and that's actually indicative of a lower start in trade by over 225 odd points or over a percent. Let's look at the big heavyweights from the IT pack. There is a sharp cut on Infosys, 3.8% lower, half odd percent decline on TCS in the pre-open trade. Let's also look at heavyweights like Reliance Industries and banks. Wipro also down, so I think IT pack could be under pressure, as is being indicated in the pre-open trade, over a percent cut for Reliance Industries. Remember, this was one of the key reasons of the recovery in the market over the last three sessions before yesterday's drop. But let's see whether it comes again under pressure. Let's look at the bank and the heavyweights there. HDFC Bank 2.2% lower at 1650. Yet again, there could be some more dip as far as the banking names are concerned. If these two heavyweight pockets do not really outperform in the market, then it's going to be getting very, very difficult for the markets to sustain or see at, stemming the fall in the current markets. ICICI Bank, there is some green. Let's hope that continues to grow even despite this weak sentiment that we are seeing across the board. But we'll keep coming back to what the pre-open trades are indicating. Dharmeshji, you did point out of course, earnings basket is something that we are going to be looking at as the next major trigger that could give us either on the either side the trigger for the markets going forward from here. The onus is on the corporates to deliver on profitability and on sales growth and income growth as well. Do you think the uncertain environment that we are in, again, people are likely to pivot towards safer assets like gold and silver at this point in time? Are you also advising investors to continue to pile on to those pockets because we are continuously in an uncertain environment, sir?
Sakshi, we have always, preferred, reasonable asset allocation depending upon what the profile of the investor. So there has been no deviation from that. So whatever is the asset allocation as per the profile is being, recommended again. And equity investment, these are the times when actually you should be deploying more money into the equity rather than worrying about 10% extra fall. You should be seeing how this same company can have a stock price 3 years return to the future. So that looks pretty, sound as of now. I don't think that this market is in for say 2 years or 3 years kind of a time frame. Usually, the market is always moves in advance of the earnings, so whether it is in the downside or on the upside. So, I mean, at best, if you look at the Indian earnings trajectory cycle, so there has been two exceptions where 4 good years has been followed by 2 bad years. That is a consolidation or degrowth kind of a year. So the last phase was 2004 to 8, and then it has commenced from 21 to 24. And 25 again it will be a 5-6% kind of earnings growth. So 26 is likely to be people expecting 10-11% kind of a growth, but I doubt that will happen. It will be more of a single digit growth only. But thereafter things should start picking up. So stay invested, look for quality companies, and gold and silver to my mind it can still have a flair of 10-15%, but it's a trading bet. So that you have to be mindful of. It's not an investment bet. And fixed deposit and all interest down cycle is about to begin. So there also you can hardly make good gains. Historically, just one short, I will 30 seconds, I will complete this data point. Last 10 years, earnings CAGR has been 10.5% for Indian market, and index CAGR has been 11.5 to 12%. Whereas FD rate as of now, post taxes, I mean 6.5% is the FD 10-year rate, and if you adjust the taxes, it is 4.6% return. So that's the CAGR for next 10 years. So even if you adjust the long-term capital gains tax, you are sitting at, if you are looking at 10-year forward, you're looking at 10% plus kind of a CAGR on equity investment, whereas in FD it is 4.5%, so more than twice the return. So it's advisable to stay invested and look for your quality companies in such a form.
Okay, got that. Let's actually look at some pockets then. Where can we actually look for within the markets for safe haven opportunities? How is your approach on the defensives, FMCG, pharma pack at this point in time, Dharmesh ji? Especially FMCG. Do you think one should look inbound at this point in time to these spaces at this point in time, sir?
Sakshi, I have a contrary view. I mean, I always prefer attack for attack rather than defense for an attack. So in such kind of a market, when it's giving you an opportunity to look for high beta quality companies, because they have also fallen very significantly, then why to stick to FMCG? FMCG anyways has never been a great wealth creator over a long period of time. It moves in cycles. I mean, 5-6 years they don't move. Then couple of years you have a good move. But structurally, I mean, overall, there has always been an underperformer. And in this market, where Indian market is reaching a certain level of maturity, FMCG, I don't think makes a meaningful, dent or moves a needle into your equity investment. There, I think you should stick to the more aggressive plays like defense. I mean, yesterday also BL won a very good sizable order, and these order inflows are trickling in unstoppable. I mean, they are continuing and they are likely to so for continue for next 2-3 years. So defense and power theme, renewable power space, are two themes which is likely to do very well for next 3 to 5 years. And their stock prices are now at a reasonable level where you can have your good investments coming to the play.
Okay, fair point. Let's also look at some of the other pockets then, sir, and try and understand how would you look at those spaces as well. Mid and small caps. I wanted to get a sense of how to approach these two spaces. Enough and more has been talked about, but the retail investors' portfolios still are skewed towards the mid and the small caps. Is there more pain to be had from the current levels as well, despite the sharp fall that we've already seen from the peak for mid caps over 21%, for small caps over 24%, and continuing to dip even further? How much more pain do you see for this space?
Yes, okay. I mean, for the space at large, I mean, they are still overvalued by 10 to 15%. There are certain companies which are not. But in the broader sense, like if you look at the last 200 market cap in the range of 1 to 500 top market cap companies. So 60-70% are still overvalued by 10 to 15%. They are still having a PE multiple of say 25 to 30, kind of a 1 year forward PE multiple. At the same time, the growth is coming at say 10 to 12%. So this kind of it cannot sustain over a long period of time. So I think there would be some problem happening. I mean, you look at yesterday's market. Market was doing well. Then suddenly there was a sharp selling in mid and small cap first. So index did not had that great a damage as far as mid and small caps are concerned. And this is likely to be attended. So you have to be very company specific when you are looking into mid and small cap basket. So anything to do with engineering, research and development from the industrial and capital goods point of view, those are the safe pockets in mid and small cap. Other than that, I mean, one has to be wary of what kind of company you are investing it and at what valuation. For example, Trent, I still see it coming down a further bit to justify the valuation multiples at which it is trading right now.
Fair point. Let's also welcome Mr. Kunal V. Parar, Vice President of Technical Research at Choice Equity Broking, who's now joining us on the show with us. Warm welcome to you, Kunal. Good to have you with us. Tuesday, I think your task is going to be more difficult than all of us to really predict the levels that we are going to be seeing. Considering the kind of wild swings that we see nowadays, it gets even very difficult to predict what will happen in the next hour or next 2 hours in the markets, especially on the index level. What we saw yesterday was panning out to be pretty okay kind of a space till about 12 or 1, but things started to get ugly post afternoon. What exactly would you foresee for today, especially after the turmoil that we've seen on the Wall Street overnight?
Well, definitely we have seen healthy correction, particularly in Dow Jones. Now we can't say it's a correction, but yes, we have seen a good selling pressure, particularly in the global market, and we have been witnessing that hitting from the overall global market. Right now, Nifty is trying to open at 22,345, down by 150 points. Now, further downside momentum would be there if Nifty breaks 22,250, 22,200. As per the option chain, even Nifty has a strong support at 22,200 to 250. So as of now, even if we analyze last 3 days of momentum, then Nifty was trading in a range bound momentum only. So overall, I think we may see a range bound momentum only between the range of 22,200 to 22,700 levels. We may not see any clear direction until unless we get the breakout of this range. So as of now, 22,200 would be the strong support for the Nifty.
Okay, what about the Nifty Bank?
If we talk about Nifty Bank right now, Nifty Bank is opening at 47,874, and it has a strong support at 47,800 level. If Nifty breaks this, if Bank Nifty breaks this level, and let's say if sustain below this level, then further downside momentum would be there. And at this level, if Bank Nifty breaks this support, and we may see healthy correction, particularly in the Bank Nifty up to the level of 47,000 compared to Nifty. So if anybody has a long position in Bank Nifty, please hold this position as of now with strong strict SL of 47,800.
Okay, fair point. Well, let's look at how the markets have settled in the pre-open, and we'll get back to the conversation with both our guests in a bit. The Nifty is indicative of an opening about 0.5% lower at 22,345, and what we're looking at is all the sectors could be opening on the lower end today. There is an indication of sharp cut on metals, on the broader markets, on IT, and even on the consumer durables and the banking spaces at large as well. On the winning side, we could see some ticks on the higher side as far as pharma stocks like Sun Pharma are concerned. Heavyweight counters like maybe Hindalco for that instance, or even a Reliance or an ICICI Bank. But there is less expectation on how the entire market breadth could be really looking at even the PSU stocks that did show us some bounce yesterday, looking at about a 0.8% cut in the morning trade itself. Let's get back to our conversation with our guest. Dharmesh ji, your sense on the PSU stocks, particularly the likes of power related stocks. We are also looking at a whole host of stocks within defense and railways come back in action. OMCs are coming back because of the crude oil prices as well. How are you looking at the entire PSU basket as well?
Looking very attractive. I mean, OMC is a trading play, but power stocks, particularly on the renewable energy, have corrected a lot. Like NTPC Green, we also have a coverage on. So the correction is a very good entry point, and the story is still there. I mean, from 3.3 gigawatt to 19 gigawatt in next 2 years is what is getting to be executed, and whatever power plants they are putting in, they are moving ahead of the schedule and time frame. It's getting implemented. So almost 8x kind of a profit growth we are seeing there. So has been the case with JSW Energy post the price correction. They have gone up too high, but they have corrected along the way. NTPC itself has corrected quite a bit. So these are the good pockets, sustainable pocket, and the beauty here is they have a PPA in place. So this earnings will definitely flow in. And then, I mean, there won't be a disappointed as far as the earnings is concerned. Same is the case with defense companies like BEL or HAL. So they are sitting on 3x to 4x the order book to the billing ratio. And there again, all this order book will get translated into the sales number, and finally you will have the profit coming in. So they won't be disappointed on the earnings part as well. So this correction which we are seeing, I think a large part of the correction is already through, and now there will be some consolidation and some buying happening at the current levels, and then you can see up move. So we are seeing, my own sense is 25 to 30% can be upside in both HA and BL by the end of FY 26. So that is how things are stacked for them. Other than that, from the say public sector banking space, again
Right.
it looks pretty good. So you have choices like SBI, Bank of India, and all to play out there.
Fair point. So PSU banks and defense plays. The markets have started to tick on a lower end, 22,350 with us, 114 at the beginning. The Nifty Bank about 0.4% lower, 240 points cut. 47,979 for the Nifty Bank. All the sectors have opened into the red, viewers. We have a sharp cut on IT, almost 2%. We have small caps that are down by over 1.2%, mid caps down by 1%. Media stocks down, PSU banks 0.7% cut, consumer durables a percent down in trade, metals dragging by 0.7%, realty down 0.6. We have autos, banks, private banks also half a percent lower each. You have FMCG down by 0.8% as 0.3% as well. You have pharma that's down 0.7%. Only two stocks on the Nifty are in the green, viewers. ICICI Bank and Maruti Suzuki. Rest all of the stocks, 48 stocks have slipped into the red right at the beginning of the trade today. Some gains coming in on say Bajaj Auto and Axis Bank, but it's a very handful screen, just top 2 or 3 stocks which have some gains on their side, but rest of the pockets have all slipped. IndusInd Bank 10% down in trade. Remember, this comes in after brokerage houses are now concerned about what the company is up to already. The country's fifth largest private lender has said that in an internal review of its derivative portfolio, they have been revealed some discrepancies which could hit its net worth by approximately 2.35% as of December 2024. With its net worth at 65,102 crores as of December 31st, the impact is likely to be about 1,530 odd crore rupees, more than the 1,400 odd crore rupees of net profit that we had seen in the third quarter of the current fiscal year as well. So that's something that we need to definitely keep in mind. IndusInd Bank is the weakest link on the banking space today. You have Infosys down 2.5%, Wipro down 2.2%. You have NTPC Power Grid Coal India as among the top drags on the Nifty right now. On the PSU space, the index down 1.3%, ONGC, IOCL, you have BPCL, GAIL, all of them down in trade about 0.5% to 1% of a cut. On the FNO space, there are some winning stocks. You have Tata Communications, 197 Communications, Laurus Labs, Tube Investments, ICICI Bank on the higher end. But on the lower end, you have again IndusInd Bank, Sona BLW, Irida, you have Bandhan Bank and also NMDC as those stocks that are facing some sharp cuts in trade. India VIX up by 1.6% at 14.2 odd levels. Let's look at the broadest index, the Nifty 500 names. Of course, apart from IndusInd Bank, there's Jyoti CNC Automation that's down in trade today sharply, 6% lower. You have Kesoram Industries, you have Nitco, you have some stocks like Pony Sugar, etc. All of them are down in trade. But what's on the winning side? Any key name that we can mark for our viewers to see from the broader markets? None whatsoever. Maybe Indigene, but very, very far and few between stocks which are worthy of taking names off at this point in time. On the Nifty Next 50 list, only 4 to 5 stocks are in the green, but very, very rare stocks. Macro tech developers, Indigo, ICICI Lombard General Insurance, Chola Mandalam. Those are the few stocks that are higher in trade. Kunal, coming to you. How do you spot the opening in the trade today?
Ma'am, actually, if you look at Nifty, right now trading at 22,358, down by 100 points, made a low of 22,320. So still Nifty is holding a strong support of 22,250 to 22,200. So nothing to worry about this downside momentum until and unless Nifty breaks this level. Now, overall volatility is high. VIX is up by 1.5% and it may go about 2% as well. So volatility is too high to get into the market as of now. So for the time being, we need to wait at least for another 15 minutes to to get this volatility settled down, and only after we can take a clear direction, we can take a clear call whether to go for long or short.
Okay, Dharmesh ji, first up, I'll take your view on IndusInd Bank. Concerns have only been mounting on multiple headwinds that are being faced by the company. How much more pain do you see for investors here? Do you, on the contrary, see this as a buying opportunity at all, or is it, possibly the stock that you should stay away from?
Actually, I mean, my gut sense is you should stay away from because 2.5% of the net worth directly translate into 10% of our business loss. So that is how these things are going to shape up. So this came from the blue. I mean, already you were trying to negotiate a slowdown kind of environment and low teens kind of a business growth, and then you are seeing this 10% kind of a business loss getting away because capital adequacy ratio and everything kicks in. It's a banking company. So I don't think at this juncture when there's already sentiments are down and people are fearing and trying to look for safety nets. So
Sure.
why to buy a IndusInd Bank? Rather you can buy a Axis or an ICICI now.
Okay, Axis or an ICICI, stay away from IndusInd Bank. In the last 3 months, the stock has already slipped about 17%. But look at today's fall. It's 10% just in today's trading session at the open. And even in the last 1 month, the troubles have only been mounting up for the company. And that only worsens for the stock price performance as well. Let's look at where are we looking at the buzz. Kunal, how would you look at a Paytm that's buzzing in the F&O space today? Should one look at it at all?
Well, if we talk about the Paytm right now trading at 676 level downside, it has a strong support at 650 level even before it took the support of the 7, afterwards it went up to the level of 768 to ultimate high of 1057. So yes, definitely stock looks very attractive at present level. So rather to keep SL at 650, we will keep SL at 640 for the safer side zone. Right now stock is trading at 675. One can get into the stock. One can get into the stock at present level 675. If we talk about the SL, one has to keep SL at 640. Now, if you talk about the target side, first target comes at 702. And if stock breaks this 702, then further upside, the momentum would be there up to the level of 1745. So yes, we may see some kind of bounce back, particularly in this counter.
Fair point. Dharmesh ji, we will also get a sense of, you were talking about OMCs, brokerage houses like HSBC have come out with a report. They're maintaining a buy on all three components, looking at positives like lower crude oil prices, auto fuel demand and minimal government intervention, and therefore they are looking at a positive, trigger emerging for the space, although they believe the rupee weakness and the GRM weakness continues to be a watch. How would you trade the OMCs at this point, sir?
Such as a trading bet. I mean, it's not an investment bet because
Okay.
government intervention is not there because crude prices are lower. So that is how it is always stacked like. And in trading bet, if somebody is looking for say 5-10% kind of an up move, so that can be taken given the kind of environment it is into. Only where I beg to differ is the a volume offtake. So demand part is where OMCs may not deliver in the long term because structurally the renewables are taking a share and they are eating into the market share of IC vehicles. So EVs and things, I don't think OMCs will be having a good volume growth going into the future.
Okay, fair point. That's as far as the OMCs are concerned. Now there is some uptick on BPCL, ONGC as well. Some, flavor returning back to the oil and gas story as of now. FMCG also, slight gains can be seen at this point in time. Um, Kunal, to you on FMCG players, we did see some momentum yesterday. Do you think this can be a trading space to be in?
Well, if you look at the FMCG counters, 4 to 5 FMCG counters are there, which are trading in a green zone right now. And not only these FMCG counters, these counters have been considered as safer investment zone for long-term purposes as well. So one counter is there which looks very attractive as of now. Stock name is Dabur, trading at 495. The way stock has been trading on a daily chart, I think. We may see a further upside momentum as well. Recently, stock has formed bullish reversal formation as well on the daily chart. Not only this, even stock form positive. We have seen a positive divergence on RSI front as well. So some kind of upside momentum we can see in the counter from the present level. One can get into the stock at present level. Right now, stock is trading at 495. Downside, one can keep SL at 485. And if you talk about first target, then first target comes at 502, and if stock breaks this 502, then further upside would be the up to the level of 515. So among others, FMCG counters, Dabur looks very attractive.
Dabur looks very attractive. Okay. Dharmesh ji, we'll talk about the auto space also at large. Today again, HSBC has a buy rating on Maruti and a target price of 14,000. Even though the domestic market outlook they believe is uncertain in the near term, they're confident of the management talking about export potential, especially for EVs going forward. Currently, although the lack of export traction is a big down risk, at this point in time, how should one play Maruti Suzuki 11,633 at this point?
You got me confused. I mean, export potential, Maruti and EVs. So Maruti first has to come out with an EV model and have a market share, and then they can be looking out and exporting. So I don't know. I've not read the report. So have my own doubts about the PV and two-wheelers doing fine this year. We have seen February number was quite disappointing, and that's not a one-off. So structurally, I mean, this is a year for, again, a consolidation year for all these PV and two-wheeler vehicles. And there, I think the fight between EV and IC will continue to play. So some market share rejig will happen depending upon the first mover advantage and new incumbents coming into, I mean, new players coming into the Indian market. So let's see how the tariff thing happens. If tomorrow Tesla and other electric vehicle companies, which are not pouring into India because of the duty structure, if they come into the play, then again this scene is going to see a heightened competition. So things are uncertain on the both counts. One is the demand has slowed down. This year it's more of a consolidation year. And the second would be the increased competition. And the third is the choice between EV and IC. So this space will remain volatile to my mind. And commodity inflation, I mean, look at aluminum prices, copper prices, they are firing up. So that will again hit the margins of these companies. So there are more headwinds than tailwind for the sector. In between, you can always have a trading play set again.
Okay. Dharmesh, because we have to let you go, I'll ask you one follow-up question as well. If you have to suggest to investors the strategy that they should abide by, even if the markets do show us some more downside from the current levels as well. And since we have been talking about an eventual recovery in the markets and we are ruling out any kind of an exceptional pain from this level as well, since a large part of it seems to be penciled in, what exactly is the strategy that you are advising people?
Yeah, definitely. So one is a very simple strategy. Continue with your steps and don't disturb that. Don't come out of it. This kind of systems, I mean, pain and psychological impact will come into the play when you see a market down. But don't be scared of it because these are the times where you can maximize your return by investing more. Second factor is if you are a individual investor, this is a time to look at quality companies, and there are two structural stories which are very intact in our country. One story is the defense play, and the other is your more to do with the entire infrastructure play. That includes your railway infra as well. So this story is likely to continue. And third option, BFSI space is looking very good. Banking is a BFSI space. One can stay invested and look for quality opportunities like ICICI Bank, Axis, and SBI and all. And fourthly, if you don't understand anything, buy Nifty Bs. Nifty ETFs are the right way to stay invested in this market.
Okay, fair point. Thank you so much, Dharmesh ji, for being with us on the show and guiding all our viewers through this very, very uncertain period in the market. Always a pleasure to speak to you, sir. Thank you so much for
Thank you so
speaking
much.
with us.
Thank you.
All right, viewers, we'll try to continue to understand the stock spotting opportunities with Kunal for you. Things are just inching higher, so that's a bit of a relief. We are in the first 15 minutes of trade and we are now recovering from the day's low as well. 22,370 now with us. We are down 94 points at this point in time, but sharply better off than the opening lows in the trade today. What do the first 15 minutes of trade really tell you, Kunal? Are we in for some recovery?
Yes, definitely. Right now, Nifty is trading at 22,375, just down by 90 points, and I think if Nifty sustain at this level, we may see a good bounce back as well. Not only this, India VIX is up by 2%, so volatility will be there. And if you look at the option chain analysis, if you look at the option chain as well, then even it indicates some, sideways momentum, because throughout the strike price and call side, we are looking, we are in short build up. Even if you talk about the put side, then we are also witnessing short build up as well. So it clearly indicates some sideways momentum in Nifty as well, as of now, as per the data. So nothing to worry unless until it breaks this 22,200, 250. But if you talk about the stock specific, then one to two stocks are there which looks very attractive. First is BPCL. No doubt BPCL is up by 2%. But if you look at the chart, BPCL looks very attractive, not only for trading perspective, but medium term to long term perspective as well. This is the stock which has a good dividend yield, dividend paying yield as well. So one can get into the stock at present level for long term purposes as well, not only for trading purposes as well. Right now, stock is trading at 261. Downside support comes at 250. If we talk about upper side target, and first target comes at 270, and if stock breaks this 270, then further upside momentum would be there up to the level of 285. So trading perspective, it looks very attractive even for medium term to long term. So one can get into the stock in the BPCL.
Okay, fair point. So that's the view that's coming in. We'll continue to focus on this entire pack, and this is the only pocket which is being seen in the green. Rest of the spaces have all slipped. Kunal, small caps for you, 2% lower in trade, and the pain only worsens day by day, every day, where we see sharp fall in the market. These are the pockets that are to correct even further than the benchmark indices. Even today we are seeing a sharp fall of over 2% on this one. Triveni Turbine 5% lower, you have Birla Soft, that's 5% lower, Garden Reach 4.3% lower, Blue Star, Inox Wind, BEML, Railtel, Ircon International, you name it, all the names which have been erstwhile favorites, Jupiter Wagons, JBM Auto, Data Patterns, you have Raymond, all of these spaces are seeing cuts of over 3.5-4% each in trade today. How should one really assess what's happening in the small caps and with their positions in this space, Kunal?
Well, if we talk about this stocks and Nifty small cap, then one can compare it with the option Nifty Bank Nifty's option as well, because we are seeing that much of volatility nowadays in this small cap and mid cap counters. Right now, if you look at the small cap counters, out of 100, I think 3 to 4 counters right now are trading in green zone, and the rest are trading in a red zone. And on an average, they all are trading with minus 2 to 3%. So yes, definitely high volatility will be there. High beta counters are there, and if you talk about the particular counters, then right now I am not seeing any counter, and then I can't look at any particular counters where I am seeing a good confidence for getting into the stock for creating any long position. So as of now, literally from my head, it's avoid to this small cap counters.
Avoid small cap counters as of now. Okay. Within the large caps, especially the banks, we are seeing ICICI Bank up and about 1.2%. But as we discussed, IndusInd Bank still at lower circuit of 10%. And this is right after it's also hit a 52-week low after the 2,000 odd crore rupee net worth hit that the bank itself is talking about after the internal review of the bank has indicated discrepancies in the balance of accounts as well. Kunal, 10% lower today. This stock had been already declining quite a bit. Now it's at a 15% circuit. So it's broken the first circuit and it's now at hit a 15% lower circuit, viewers. IndusInd Bank now at 765, a 15% lower circuit. So the second circuit is what we are seeing within the first 15 minutes of trade on IndusInd Bank because of this news that has really come in. IndusInd Bank, after the lender has said that their internal review has estimated an adverse impact of 2.35% on its net worth as of December 2024, and the net worth is expected to decline about 15 to 1600 odd crore rupees to about 2000 odd crore rupees. This is higher than the net profits that the company had really reported, and that's the kind of sharp fall that we are seeing on the stock price today. What should one do with IndusInd Bank, Kunal?
Well, right now counter is locked with lower circuit and further downside momentum would be there. Stock made a low of 763 in June 2022, and the stock is trading near to that low. If stock breaks this level, then further downside momentum would be there up to the level of 660, and for the downside momentum would be there up to the level of 580. So from it's a clearly no sign from my side to get into the stock as of now, even if stock took the support of this 660, because selling pressure is more in this counter, and we have been seeing a continuous correction from the upper level of 1500. So this counter may take more than a 6 month to 9 month to recover its momentum. So it's like clearly avoiding sign for this counter.
Clear avoid signs emerging for this counter at this point in time. Do not think of this as a buying opportunity. 15% lower today, and the bank has already lost about 50% of its share value in the last 1 year itself. But as troubles are mounting on, things are not very clear as to by when will things be back on track. So both Kunal and Dharmeshji today have said that one should avoid this space as of now till clarity emerges whether things are on track. Kunal believes 6 to 9 months of a recovery period will be there. So a lot of pain is what you could encounter over the next 6 to 9 months. Let things settle down. Let's finally get a sense that the bank is back on track financially and the troubles are getting taken care of, and only then take a call because the stock could further slip from the current levels is what Kunal is saying. Kunal, any key level where you see the stock further slipping to on IndusInd Bank?
Yes, definitely. We may see some further downside momentum up to the level of 660, and if stock breaks this level, then further downside momentum would be there up to the level of 580. So we can see further 200 point downside momentum that we can see in the counter.
Okay, fair point. Thank you so much, Kunal, for that because it's an important one to really look at for today. Viewers, keep an eye out on IndusInd Bank and also keep in mind what our experts are advising you on that. We don't want you to get trapped on the wrong side of the stock price at this point in time. Okay, let's look at what's happening in the markets. Okay, Sun Pharma is up by 1.3% in trade today. You have Adani Enterprises that's up. Britannia is up in trade as well. You have it within the sectors oil and gas and realty, both of them showing us some ticks on the higher side as well. We've talked about the oil and gas space. Let's discuss the real estate space, Kunal, with you. Any suggestion here that you would have? Does it look promising, or is it only a bounce which should not be really taken in too carefully at this point?
Well, definitely I'll go with the macro tech developers Lodha right now trading at 1091. Since morning, I have been like keeping an eye on this counter. Stock has strong support at 1050 level. Even before stock took the support twice, and afterwards it went up to the level of 1300. So we may see some replicate momentum at present level. One can get into the stock at present level with strict stop loss of 1050. If you talk about upper side target, and first target comes at 1150, which is its previous top, and if stock breaks this 1150, then further upside momentum would be there up to the level of 1230. So definitely in this mid cap counters, I think Loda looks very good, and we may see some good upside momentum in the counter.
Okay, so that's as far as the real estate space is concerned, and Lodha within that, where Kunal is keeping a keen eye out on. There are some reports on the India strategy that global brokerage houses are just mentioning. So I'll just read out for all our viewers to understand what is the sense that global brokerage houses have on India in the current markets and the scenario that we are undergoing currently. Morgan Stanley on its India strategy has said that Indian stocks look attractive. They believe this is a stock pickers market which is unfolding. They also believe there is a likely positive shift in fundamentals is not in the price as of now, so which means there could be further upside. They also expect India to recover lost ground against the peer group through the rest of 2025. Remember, the Nifty was an underperforming index globally in 2024, so that's where they expect the Nifty to catch up. They also believe the growth is expected to recover from the recent slowdown. The ongoing quarter may produce upside surprises in earnings is what they are saying. They believe valuations are attractive across market cohorts. Financials have outperformed and they expect that to continue. They also believe consumer discretionary and select industrials could also follow suit. Next, we have Jeffries' report on the India strategy, where Jeffries has said that the India market is poised for a near-term bounce. They also prefer banks, NBFCs, autos, property and power to play the same as well. They also talk about how given the potential weakness in DXY and US economy, they bring IT to an underweight as also premium valuations stick out there. They are moving the weight to metals as to play the potential China recovery and possible safeguard duties. They are trimming pharma weight on potential US tariff concern, and Crompton Consumer and Shriram Finance, they are attractive valuation versus predictable growth is what they believe. On Tata Steel and Hindalco, they have added them to their model portfolio. They have removed M&M, TVS, Eicher, Maruti. So exited auto, but added Tata Steel and Hindalco from the metal space. They also believe they have removed Home First Finance, TCS, Infosys, Coforge and Sun Pharma from the model portfolio as well. So big on metals, they are big on Crompton Consumer, Shriram Finance within the financial space. They prefer banks, NBFCs, property, power to play the same as well in the near term bound. So that's as far as some of the brokerage houses reports are concerned. Anything in the interim that Kunal you have looked at into the markets, any key stocks that we should keep an eye out on for today?
Well, definitely, I think today's fancy would be the OMCs only. We have been seeing a good upside momentum, BPCL, HPCL, IOC, but apart from these stocks, I think one stock looks very attractive. It's a Chennai Petro. Right now, stock is trading at 521. Stock has already taken the support. Of its previous bottom on a weekly chart. Right now, stock is trading at 515. Even if we talk about the early chart, stock has been trading above its 50 MA. So, it looks very attractive on early chart and daily chart as well. One can get into stock at present level. Downside support comes at 500. And if you talk about upper side target and the way stock has been trading on an early chart, we may see a upside momentum up to the level of 527. And if stock breaks this 527, then further upside momentum would be there up to the level of 545. So I think OMC's oil counters are would be in a fancy today's trading session. So Chennai Petro looks very attractive.
Chennai Petro looks very attractive at this point in time. Let's again look at the broader markets to see if there are any stocks that we can mark on the positive side. You have IndusInd that we marked in the morning, that's up and about today. You have Sigachi Industries 4% higher. Then you have HEG Limited that's up 5% today. You also have stocks like Axis Cades Technologies about 5% up. Lipsa Gems and Jewelry has been actually up even yesterday. It's been in momentum. That's also pulling up in trade again in trade today. So those are some of the stocks that are catching on to the momentum in the broadest index as of now. Anything from the Nifty 500 basket, Kunal, that you'd like to look at?
Well, if we talk about Nifty 500 basket, I think the way all the stocks has been trading, I think BPL Pharma looks very attractive amongst the pharma sectors. Not only this, even Sun Pharma looks very attractive. But if you talk about another counters, then PPL Pharma, Laurus Labs, the stocks looks very attractive on a daily chart right now. PPL Pharma is trading at 204 level, and stock has already taken the support on its weekly chart and on its daily chart. I think we may see some good upside momentum in the counter from the present level. Downside, strong support comes at 195. If you talk about the upper side, and first target comes at 208. And if stock breaks this 208, and further upside momentum would be there up to the level of 220. So PPL Pharma looks very attractive on a daily chart, on a weekly chart. And let's talk on this Laurus Lab as well. The way stock has been trading on a daily chart. We may see a good upside momentum up to the level of 588. And if at this level counter breaks this 588, then further upside momentum would be there up to the level of 620. Downside, at this level, downside support comes at 558. So one can go for creating a long position with strict stop loss at 558.
Okay, fair point. Got that done. What about Sun Pharma from the large cap pharma space? How are you looking at that one?
Well, if you talk about Sun Pharma, it looks very attractive on a daily chart. If you talk about weekly chart, yeah, last week stock formed its hammer candlesticks formation. It's a bullish reversal formation, and right now stock is trading above the high of its hammer candlesticks formation. So even we got the confirmation from the candlesticks formation. Not only this, we have been witnessing some kind of positive divergence on a RSI front as well. So this stock looks very attractive right now. Stock is trading at 1642 level. One can get into the stock at present level. Downside, we will keep SL at 1600. And now, if we talk about the target, the way stock has been trading on a daily chart, I think good upside momentum would be there up to the level of 1675. And if stock breaks this 1675, then further upside would be there up to the level of 1730. So yes, pharma looks very attractive and very defensive during this turmoil in the turmoil in the market.
Okay, fair point. Well, Kunal, thank you so much then for being with us on the morning edition of Market Today and sharing with us all the opportunities even in this kind of a tough market. Let's hope things improve for the better. We have seen some cool off happening as far as morning lows are concerned, 22,368. Let's hope that this improves for the better. As far as the markets are concerned, we are now seeing a pickup on some of the sectors. Apart from realty and oil and gas, we also have some pharma and FMCG names garnering us some traction, and therefore you have BPCL as the top mover, Sun Pharma as the second mover from the top as far as the Nifty stocks are concerned, ICICI Bank, Adani Enterprises and Britannia as the top 5 movers on the Nifty. You also have HUL, NTPC, HDFC Life also pulling up in trade, but on the downside, IndusInd Bank, let's look at again, 20% lower for IndusInd Bank. So within the first half an hour of trade, we have seen IndusInd Bank slip from 10% lower circuit to a 15% lower circuit, and then a 20% lower circuit is what we have already seen for IndusInd Bank, 720 coming in. So this is the third circuit that we've actually seen the IndusInd Bank counter hit in just the first half an hour of trade. Like Kunal mentioned, there is further downside that he also expects from here, 660, and then if that is also broken, then the stock could slip below 600 odd levels. Time to be cautious on IndusInd Bank, and at this point in time, do not look at this one as an opportunity to invest in. There are some concerns on the balance of account discrepancy that's likely to hit the net worth of the company. So keep in mind all of those points and speak to your financial advisor in case you already have the stock into your portfolio at this point. We'll leave you at that, viewers, on this special edition, but do stay tuned. Throughout the course of the day, we are going to be tracking the market momentum for you. At 12 noon, I'll be back with daily calls to have all your stock queries answered by top market experts. So in this kind of market, if you're worried about your stock portfolio, if some of the stocks you're not clear about as to how should your strategy be, send us all your questions and we'll be happy to take them with our top market experts on daily calls at 12 noon. Stay tuned.
मुख्यमंत्री जी, स्वागत है। लखनऊ से निकलकर आप नई दिल्ली आए हैं, हम लोग बहुत खुश हैं इस बात से। आप सांसद रहे, महंत रहे, अब आपने इस महाकुंभ का महाआयोजन किया। क्या आपको लगता है कि आपकी नज़र में आपकी ज़िंदगी की सबसे बड़ी उपलब्धि थी कि करीब 66 करोड़ लोग 55 दिन आए महास्नान करने के लिए?
देखिए, अवसर जीवन में सबको प्राप्त होता है, लेकिन